All right, ladies and gentlemen, warm welcome back it is to all of you, and especially to those of you joining us for the first time to the Lockdown Summit 2020. We've had a fabulous day through the morning. We've had speakers who've come and added a lot of value. We've got enriched a very positive exercise happening thanks to people at Tesseract, Experiential, people who are the brain behind this lovely platform. This part of the world is making a tangible difference to the people who are connected right now on this platform. People essentially who are the stakeholders of the experiential marketing industry. Therefore, the theme for the entire summit has been the future of experiential marketing. And doing so for us now is also a panel of wonderful people from all walks of life. These are not the regular people who work for the event companies directly, but are people who essentially do a lot of great things for people in the events and experiential industry. And it is my pleasure to now introduce to you the panelists. Let me give you a one-line introduction of all my panelists, and then let them talk to you about what they do usually. Okay, so ladies and gentlemen, joining us on this panel in no particular order, but let me have this pleasure of introducing to you the corporate lawyer and investment advisor, Rehab Dias. I also have with me the investor and director, Tetron Commercial NBFC, Anubhav Poddar. Also with me is the founder of PassionWorks, Komal Chawla. And then I also have from Centrum Wealth Management Director, Arvind Kejriwal. And I also have the Family Office Business Director from Centrum Wealth Management, Rohit Mohan. Welcome to all of you here.
Thank you so much, Riaz.
Thank you.
Hi, guys. Thank you for taking your time out, guys. Okay, so we'll start first in the order of your appearance here. I have Anubhav, Arvind, Komal, Rohit, and Rehab with me here. So in that order, if you could introduce yourself as to what you do in a couple of lines per head. So we'll start with Anubhav first.
Hi guys, this is Anubhav. I'm director of Tetron Commercial. This is a NBFC based out in Bangalore, which primarily funds real estate projects in Bangalore. It has been our endeavor to look into the newer economy growing in, even newer business opportunities we look forward to. These are, I think that this situation that we're in right now is an absolute red carpet waiting to be rolled on for newer horizons.
Thank you so much, Anubhav, for that. And Arvind, about yourself?
Yeah, hi. I'm Arvind Kejriwal. I work with a company called Centrum Wealth Management. We are part of the wealth management outfit in India. We manage assets for Ultra HNI, Scott Crash, Treasury Management. We are spread across India. We have offices in Singapore as well. Current situation it's been really challenging times for us, basically because we manage a lot of wealth for HNIs, Ultra HNIs, Scott Crash, Treasury, and we have already seen the mayhem which has been happening in the market. So the real testing times for us, but it stores good things for us as well because it gives us opportunity for our clients as well to find out new horizons of investments right now. So yeah, looking forward to this chat.
Thank you, Arvind. Thank you very much. And Rehab, with yourself.
Hi, Raz. Hi, everybody. Everyone doing well?
Yep, very well. Thank you.
Guys, I'm the one that brings the bad news typically, but from a legal perspective, now I think is a good time where people are looking at their contracts, making sure employees are not just laid off. What benefits is the government rolling out? Is there a way for smaller businesses that don't possibly have 10, 20 employees? You know, how do we help those businesses? CSR availability, is it reaching the ground level? There's a lot that's happening. So as and when I can jump in and help you guys and let you know what the ground reality of things are. Thanks.
Thank you, Rehab. Thank you for introducing yourself. And Rohit.
Hey guys, hey everyone. My name is Rohit. I work for Centrum Wealth. I'm one of the founder members there. I'm a career private banker. Before this, I worked for a Swiss private bank, Credit Suisse, and prior to that with Kotak. So after the Ultra HNI business at Centrum, I'm based in Bombay. And these times are testing for all of us. But I think especially for people who are engaged with listed assets, which is where we are, I think the issues with what we are doing are more stark in nature, and the bad news comes every night from the US. So it's a tough time to be in. Yeah.
Thank you for introducing yourself, Rohit. And finally, Komal.
Hi Riaz, hi everyone. So I'm Komal Chawla, I'm founder of PassionWorks. So I've spent a decade in the industry and as a corporate HR. I work with various organizations. But now I've opened my organization and serving the startups where they don't have permanent HR, but there is a need of HR in all the organization. I understand, and everybody understands nowadays. So I'm serving those startups, and for the startups, basically, this is a very tough time. I can understand, and from the when this thing has started, the COVID-19, I thought, what I'm going to do now? But I think HR has a very major role today in the startups and in every organization to bring together all the employees or the team leaders on the one platform. And I think this is very important time for everyone.
Thank you for introducing yourself, Komal. A multi-billion-dollar industry, the events and experiential industry, was the worst hit, right? And of course, the other industry that got worst hit was the travel industry, right? I'm not saying there's any industry that has been safe from this global pandemic, but I'm saying the worst have been these. And that's the reason why we have all the stakeholders of the events and experiential industry under one roof as part of the Lockdown Summit, waiting to hear each and every one of you as to how they can do things differently. There have been questions from people who spoke about, who want to know about what is the need of the hour right now. Do we save or do we spend? Do we look for a career change or do we go with the current job? Do we invest or do we divest? Do we buy smaller companies or we get bought into the bigger companies? There are various other questions, of course, questions which may not have occurred to my mind as well. Maybe something that you on your own study as well have come up with as well. We're going to discuss all of this in the course of time over the next few minutes on this panel. But to start with first, Anubhav, what do you think is the need of the hour right now for people to do from your point of view?
Frankly speaking, the first thing that is imperative right now is not to panic. Theories are going around about, doomsday and, this is everything is going to get over and we don't know when the lockdown is going to open, and if it opens, when will the dust settle in and all that. The question is, there are certain things which are in your control, certain things are not in your control. It's absolutely important to keep a focus and wait for the dust to settle down. I am absolutely sure that a new economy, a new normal in this world is going to occur. Economies are going to look for allies. Emerging economies are going to have great opportunity, because I think, this is my opinion, and also I've spoken to so many people over these last weeks, that there is a absolute realization that over-dependence on one economy, particularly China, is very dangerous. And that is why I feel that what is the need for the hour is everybody to look into opportunities that you can get out of, not doing business with China and trying to create that service or create that business within India. But again, all this is something that is going to emerge. A new economy is going to emerge. The most important thing is, do not panic. Do not take wrong decisions. Don't look for those quick, small waves to ride on. That can be very detrimental.
Thank you so much, Anubhav. Arvind, your take on this?
Yeah, I'm going to see a little change in patterns of way people are going to react or move forward when they look at things. I'm going to see a lot of financial inclusion, financial savings to come in from people. People are going to give a little more thought to savings now. Look at thought to health. Look at thought to how to take care of health of themselves. Look at more immunity building exercise. A lot of work would happen on the health industry overall. Plus, as Anubhav added on the supply chain side from China, I think there's a lot of action which is going to happen in India, which is going to really help a lot of companies, because globally we're going to see a lot of companies trying to diversify from China, reduce the risk of one supply country, and move on to India and other countries as well. So there's a lot of opportunities on that side to come in for sure.
Thank you so much, Arvind. I had to quickly make a change in the room because the plug point wasn't working, so I had to move, and that's the benefit of being a part of the virtual conference, I guess. Okay, so yes, moving on to Reha.
So I think a lot of smaller companies will have to pivot. A lot of documents will have to be reviewed in terms of business plans. What are the cash flows? What are the cash burns? when you were earlier speaking about whether it's a good time for companies to get acquired or not, we obviously moved on that like later. But I think now is a good time to sit and assess your business. Where does it stand? Where do you feel an opportunity that it's going to go into? A lot of businesses are even pivoting, like manufacturing businesses, into various products are now moving into the medical device space, testing kits. There's a lot of collaboration that's happening. I think it's opening onto a very, it's becoming a free market because of a larger China fear, obviously. But in a way, there's some sort of connection that's coming in between companies. There's a lot of intellectual property being shared. Like for me, in my line of work, contracts are coming my way where companies are bringing together their intellectual property now. So people are opening up to the idea of coming on board, pivoting. Like Mr. Anubhav and Arvind mentioned, it has to move from a one supply country to we have to have the essentials being marketed in every country, not just India. Obviously, we're obviously going to be biased to our country, but I think the thought process is going to change for every aspect of business. And going back to your books and looking at your business plan and sitting with your investor or sitting with your marketing officer and looking at that spend, it's all going to change for sure.
Thank you, Rehab. Rohit?
Yes, hi. I think I have a pretty similar points of view. I have a couple of points though here. Is that I believe that this crisis, every crisis is unprecedented. Like every crisis is new. And at this point in time, right now, we're in the middle of this crisis, hopefully in the middle or post the middle. So we don't know what really impact. So I think, so assuming you
your audio isn't clear.
And see as to what the world is going to look like post. Am I clear right now?
You're clear.
Am I clear right now?
Clear. Yeah, now you're clear, yes.
Right. So I was mentioning that I think if you're a large company or if you're a mid-sized company, it makes sense to just hold back just a little bit right now, maybe consolidate for the next 3-6 months, assess as to what the damage that there could be. In addition to what COVID is doing, I think even the credit markets are becoming very, very tough for smaller companies. So if you're a small company, you need to look at where you are right now. You need to look at where your strengths are, where your cash flows are, who are your customers, and which industry are you in. So if you are in something like a travel, leisure and all, I think it might not be a bad idea to maybe just to close down a few outlets if you're a restaurant or something like that, and just wait for things to get better before you expand a little more. This time calls for a little more restraint because we don't know what the size of this devil is going to be. And in India, unfortunately, there are certain fixed expenses which are really, really high. It could be manpower, it could be rentals. So I think this is a good time to just consolidate and see where you are in your life cycle and also look at the cash flows.
Brilliant.
Yeah, thanks.
And Komal, from the point of view of PassionWorks, you're a people's person, of course. You're consulting with a lot of companies here. So from your point, what do you think is the need of VR right now?
See, I think we should see it as an opportunity. Many of the organizations which I'm working with, everybody is taking it as an opportunity with the people. They are trying to improve their expertise in the period of this time. Everybody has, entrepreneurship in their mind. Everyone has something in their mind which is related to entrepreneur. Now they have to, come out with some ideas and something strategically. Even the lower side of the pyramid people has to understand and come up with the strategies and sit with the senior people and be a part of the strategy, and very open discussions has to happen. In every organization that I'm working with, we are doing these sessions, online sessions basically, where everybody is a part and everybody has a say to it. So I think now we should understand where we are lacking. This is the time, and we should take it apart we should be ready for what we are going to see in coming 6 or 8 months. We should be ready with the, consequences maybe and the opportunities.
Thank you. Thank you for those tidbits that you all share with me. Okay, now I'm going to open this up for the entire panel. Anybody can pick these questions up because I think we're all working on the same page, all of us, of course, in our own different domains, but we're all working on the same page right now. And as we speak, our participants have similar sort of questions as well. And in the end, we'll also open it up for Q&A if in case there is anybody who's wanting to ask a specific question to any of the specific panelists, we'll have that addressed to you. But right now, feel free to jump in, anybody who could answer these sort of questions. It's funny that people use the word gig economy, gig workers, right? While the term gig means an event, right? Something that we essentially were part of, we are part of. But now even technologists and people working in the technological industry, the IT industry as well, call freelancers who work for them from their home gig workers, right? So when we're talking about a gig economy, and while we were in the midst of a gig economy trend before hitting the end COVID-19 pandemic, is gig economy going to get a bigger execution given there may be cost-cutting measures from companies now? Are we going to have more people being forced to not be on the payrolls of the company and be part of the gig economy, where they could have them work as freelancers rather than just have them work on their payrolls as direct employees?
Absolutely. So I think one major change that at least one can envisage right away is that most of us are working from home, I hope. And there is a significant cost differential that one really realizes that, you don't really need to go to the office and occupy that space. So that is one big difference that you're going to see, I think, in the next 3-6 months itself, that there will be a lot of there's a lot of work which is going to get outsourced. Komal Air is anyway doing outsourced HR work. And I believe that there's a lot of core activities as well, which could be outsourced. People sitting at homes or sitting in remote locations. You don't have to sit in BKC or the equivalent of BKC in Bangalore and Gurgaon to actually contribute to the company in many ways. So the gig economy, as you say, the term that you use, I think it'll be the in term. I think cost is going to be more and more relevant. So that's my opinion on this.
Absolutely, guys. So also I work, I wanted to keep the introduction as short as possible, but I think it makes sense to bring it up now. I basically was representing Sikar Capital in India to invest in a lot of companies like Dira, Zoomcar, 1MG, MPL, all these. And we as lawyers, anything that has software, legal, where basically foot soldiers are not required, I think this has to be the way forward. The regulatory framework will have to change. Like I was mentioning earlier, from a provident fund perspective, you don't have to just have 10 employees to make sure that these little freelancers are taken care of. So there's going to be a lot of change on that front. We're going to see a lot of movement in that front. A lot of SaaS-based companies are going to become very, very relevant right now. So that's a great opportunity for acquirers to take charge of biotech, healthcare, SaaS-based stuff, a lot of cloud-based services. So that is something that we not only have to understand where this is pivoting, but what great opportunities are going to come up. I get a lot of inbound inquiries from startups saying that you have investors, this, and they're literally like many opportunities coming my way also saying that this is our revenue, this is the client who get us bought out. So, and everyone's happy to just work at home and, take this movement forward. I think this is the way forward for sure.
Okay, Arvind, a question to you, okay?
Yep.
What's the difference between finance planning and wealth planning at these times?
See, basically, I mean, when you come to your financial planning, is basically you start to do when you start to invest in when you're beginning your career, or you want to start building assets or save certain portion of money. You plan out for certain expenses which are going to come in future. Plan out, start investing for that in a systematic manner or a regularized manner. For example, take an example that you want to buy a car, say 4 years, 5 years down the line, or go on a holiday, or you have plans of your kids' wedding, stuff like that. So you kind of financially plan that, how to invest and kind of manage it. Wealth planning would be more of wealth preservation. It predominantly comes into clients which are more HNIs, ultra HNIs, who have created the wealth for themselves, but want to kind of preserve that today for future generations to come in. there are two different thought processes when people do a financial planning or a wealth planning. Wealth planning, it's a lot to do with wealth preservation than basically look at returns perspective. Financial planning is more goal-oriented, looking at higher returns with certain things to be achieved in a particular time frame, which they would have in their mind.
Yeah. Thank you, Arvind. And Anubhav, I think from your experience as an NBFC, right?
Yes, please.
Yeah. How long do you reckon the market will take to bounce back post the end COVID times?
That is the golden question. In fact, right now we really don't know how deep we are into this crisis. Whether we are midway or we are even just starting or we are even getting off. So only all theories can go around right now saying that it's going to take 3 weeks and 6 weeks and 9 weeks. I say that probably there is a spin to this. What needs is to look beyond. You need to have a vision right now to look beyond when the dust settles. I think right now, if we speak from today, we are looking at least 3 months away where you can actually know how to minimize the damage that you were in and try to move forward. Now, let me give you a small example. Now, mutual funds, what they do, at times is something what they call as side pocketing. They look into the portfolio and they look into companies or the investments they have made that are not doing so well. So what they do with that is they put those investments out of the portfolio and move forward. This is something that I think everybody in the walk of life will have to do, whether it's an industrialist, whether it's an investor, whether it's anybody. And you got to take out the pieces of the pie which are not good and not working for you, and really go forward with what's working and bring in newer things over there. I think that is how you got to look. The time frame right now is anybody's guess. I think we're talking in months, not weeks.
So from your perspective, what do you think are the immediate do's and don'ts one needs to follow to tide with these kind of times?
Okay, so the first thing that I would advise anybody to do is liquidity is gold. Keep yourself as liquid as possible. Invest only in instruments which are going to give you liquidity, even if you're giving you lower returns right now. Security, liquidity in a time frame that suits you is best, because imagine a good opportunity coming to you and your money is invested somewhere and you can't take that money out, and you need to go to an NBFC or you need to go to a bank or you need to go to somebody and take a loan. Now, with so much of disruption, the entire ball game is going to change. So I think if you keep yourself liquid and you just keep yourself and have a little patience, you're going to get great investment opportunities, whether it's into equity, whether it's into currency, whether it's into commodities. These are going to be the sectors that are going to give you the first move advantage. Of course, my real wish would be that the government of India look into this entire opportunity, and instead of having an industrialization policy or an industry policy, which they have been giving up for the country for so many years, they talk about a re-industrialization policy.
Wow, re-industrialization policy is the way forward. I'm sure all of us agree on that, because newer measures can get us newer beginnings, and newer beginnings can therefore transact into newer money coming into people's accounts, and therefore them doing better, giving back to the country as well, to strengthen the economy. Yes. So Rohit, from your experience as a wealth manager, especially from a family office perspective, how has wealth management moved in the last decade, and how do you see it move in the next decade?
Right. Thanks, Shreyas. So I believe that the wealth management industry, just like a lot of other industries, has evolved quite a bit. There was a lot more transactional approach to the business. In the last decade, we all there, me, Arvind, and even Anubhav was a part of the industry. I think today it's become a little more advisory based. So what essentially it means is become more like a doctor's game, that the doctor is paid by you and not the medicine provider. So that's been the big change in the last 10 years as we see. There's a lot more technology that has come into our business as well, the wealth management business, which is great, because a lot of times the data that you sometimes cannot visualize because you have limitations in terms of ecosystems and structure. gets thrown up by technology. So I think these things have helped. The regulations have been very, very pro investors. Although wealth managers have started to get paid lesser on what they raise as investments everywhere. Like, I'm taking a cue from Rehab as well. I think even in when we raise private funds, funding fees, we don't get paid as much as we used to get paid a decade back. But it's great because the size of the capital has grown. I'm not exaggerating. The size of the capital, I would have seen, grown some 20x in the last 10 years, right? So that is how it's changed the last 10. The next 10, I would say that the technology is going to come into the forefront because the difference he and Arvind will be able to create for an investor will not maybe commensurate them as to pay to people like us. So I think more and more people will get onto the technological based platform for investing. That's for the listed space. I think it's only going to be ultra HNIs and people looking at private investments, people looking at specialty real estate investments or distress investments who would be able to afford wealth managers. So I think this will become a specialty business over the next 10 years. One more thing is that in India, most of us have been dissing passive investing strategies, which is indices, investing in indices because it doesn't pay us. But I think that's going to be super hot in the next decade. And I'm sure there'll be many things because 10 years back, I didn't imagine this is how the industry is going to be, but it is. So yeah.
And I quite agree with you at this point in time, since index has gone down too low to its maybe 10-year low. The only way is up for it. So when things get better, that's the first thing that will shoot up, irrespective of which script you're investing in, of course.
Yes.
Yeah.
Correct.
So that said, I want to bring in Komal here. Komal, from an employee mindset, okay, how are you managing people and their performance during this time?
See, in the initial 1 week was very difficult to tell people that it's work from home, not work from home completely. So I can understand that they have to, manage work from home and work for home. But initially it was completely work from home. They were not able to manage. But at the end, we have come up with some policies for work from home and work from home, like give us 4 hours, 5 hours, starting a day with a video call, in the middle of the video call. And the managers are actually playing a very big role in this, understanding how we are, keep them busy. It's very important to motivate people to work during this period. There should be no out of mind. The work should not get out of mind. Even people in the managers should work for the expertise of the employees. I'll just give you the live example of the companies here. There's one company exhibition which they do international exhibitions. Their complete work got shut down because of the international, there's no traveling. So what people are going to do, the designers, very junior people are working there, the mid-level maybe, the designers are working, the callers are working. So what they are going to do in the period of this, because there's nothing to do, there's nothing to design on. So what they are doing, they are paying people, they are giving them fees to get online sessions. If somebody is a 3D designer, maybe a 2D designer, go for AutoCAD. Go for something which going to improve their expertise after this completion of this COVID-19. Once they'll be completing it, they should be ready with the templates, the number of templates they are going to use in the exhibition, which is going to come up, and they know what is going to come up after 3 months maybe. I'm not saying that what is come up after a month, I'm not saying, but maybe after 3 months, and they should be ready. And these online courses and giving them inside of these online courses is a very major role a manager playing, that they should get ready with the plan, the training plan, which they might going to get in maybe in a year. They should implement this in this 1 month. This is very important right now. So keeping them busy is the major agenda, how things are going to work. This is the major agenda. So what actually giving them a major purpose rather than giving them one job of what they were doing sitting in office. Give them a major purpose, show them a vision which actually didn't get time to show them. So employees will get busy in this. This is a very, very crucial time for them also to understand these things. So, the communication plays a very major role in this. Again, communicate with them time to time, involve the families too. In the evening, maybe at 6, connect with them, with the families, bring their childs, bring the energy in the communication, and just create that zeal and enthusiasm in that yes, this is going to over, and they're gonna work, and they have to work. And this is not their this is a leave, not this is not a leave, this is the way to work, and major they have to work more in this period.
This is the way forward, and this is how things are going to be. Of course, it's not just from the employee's perspective that the employee is investing money and time on you to get you upskilled with more courses so you can prepare yourself, prepare your armory, your arsenal to the bigger battle that's going to come, that is re-strengthening and rebuilding the nation's economy back again. But the employees also at the same time realize, now I'm guessing, that the better fit they are, the better place they will be. Which means going forward, if they can add more skills to their skill set currently, that's when they'll be employable, because every company is looking to chop, right? So they're looking at people who can add more value, like one person does 3 people's work, then you will be the first choice of, to stay on the payroll or to stay on the freelancers, payroll as well.
Layoff is always the last option, I can say.
Yes, of course, yes. Yeah. So
from unprecedented times though, guys, I'm working with companies, and the amount of employment contracts that I've been reviewing is very sad. It is honestly.
Yeah, true.
So I was just coming to Rehab. Rehab, I have a question for you, a particular question for you. Now, a lot of these companies are also looking at mergers and acquisitions, right? Companies are at this point in time looking also to see, can they hive their business off? Can they sell themselves to a bigger agency and wash their hands off this pandemic completely in a literal sense? Or can they get invested in, right? So when I talk about mergers and acquisitions, the valuation of a particular company, because we also have stakeholders probably who are also owners of agencies who are listening to us right now. Let's say the valuation of a company before the pandemic was 10x. Now, keeping the pandemic times in mind, keeping the cash reserves in mind, I think the valuation will be much lower. So how do you see the M&A play from a regulatory point of view, from a policy point of view, from a valuation standpoint now for these companies?
Valuation standpoint, sure. But from a valuation standpoint, I think this is where a hoax and a fake will be highlighted, and companies that have true relationships with clients that are willing to extend contracts for a year, 2 years, because that's gonna be honestly, Riaz, where the meat of the matter is, because everything is gonna be looked at with a fine comb towards revenues. Revenues comes from clients. Clients have their contracts in place. If you can manage, depending on retrospectively how you have built your company, to extend those client contracts, that's definitely going to be number one. Number two is laying off people, cost cutting. That is again going to be, trimming is definitely going to be a big part of things. Sad state of affairs, which we can talk about the regulatory aspect later. From a regulation perspective, there's going to be less court mergers. As you guys may know, there are court insinuated mergers, but more slump sales, asset purchases, a lot of companies being absorbed. Depending on which hat I would be wearing, whether I'm representing the investor or the startup, the due diligence can definitely be summarized. It can be reduced. People can be mindful of the fact that these companies that could be potential targets have stomachs to feed. I think there's going to be a little bit of empathy also, and the due diligence process accordingly then be reduced. That's one way I'm seeing, not necessarily regulatory, but I think court-induced mergers are going to not be a thing right now. It's going to be very contractual, very slum sales. And, a lot of, because it's the way the business works, a lot of word of mouth. On if I'm a good connect, I'm going to go and tell this person, come on, Rohit has introduced me to a great company. Rohit stands by certain principles. I will go with a lot of people and connections. So I think connections are definitely going to be the way forward to move businesses. I also believe, like Rohit was saying, that investment bankers are taking a hit for sure, because it's easy, very easy. Like Sequoia started search. It's very easy for companies to directly go and reach out to these big boys in short. I think that's also going to be another way forward for targets with, we could probably create like a portfolio of targets with certain amount of revenues. Are they looking to get hired? Are they willing to share employees? Are they willing to open their source codes? There's a lot that can happen specifically from the M&A cases, but it can be fragmented into a lot more, is what I'm looking at.
Thanks, Rehab. I have a lot of questions which I can bring out.
Yes, can I add something to the same point?
Sure.
Yes, go ahead, please.
Yeah, what I'm going to see is even larger companies which are cash rich today are going to see this as an opportunity with companies to buy out. I mean, as Rehab was saying, they would have really identified companies and would want to kind of acquire them over a period of time. We're going to see a lot of action happen on that side as well. Companies which are much larger in market share, just to increase their market share, could find a smaller companies which is much better and could be part of their DNA, to see a lot of acquisition and a lot of mergers happen on that side as well. I mean, I think a lot of cash-rich companies really looking out as well for opportunities right now.
I'm sure there are plenty of opportunities for people to buy if they have the money, if they have the moolah. So, of course, the guys who want to grab the opportunity will definitely grab the opportunity. But the guys who want to just merely survive at this moment of time will do just that as well. But you know what? I have a lot of questions that I would, on a different day, I'd love to ask all of you guys. But what I want to do is I want to open up this panel to Q&A from people and make use of this time to see what they really want to ask. So here's what I'm going to do. I'm going to just jump into the Q&A section and open this up for you. Feel free to answer these. Okay. The first question coming up right here is, at these times, smaller companies are not able to give salaries to their employees. What alternative options can that company have in terms of employee retention? Which one of you would like to take this question up?
Yeah, so I think it's related to retention, employee retention. I would like to answer that. Yeah, so if companies are not paying the salaries, see, as COVID-19 has steps, step 1, step 2, step 3, same with the companies. I think companies should take write things like step 1, what they are going to do, in step 2, what they are going to do, and in step 3. Not giving them salaries, it's fine, but sit with them, do respectful, open communication, involve them in the decision making is the true thing to do right now. Second, what they do, they should, if they want to cut a salary, talk to senior people. Don't bring lower people from the pyramid of the lower blue collar. Maybe should take care of the blue collar people. Talk to senior management people. Take inputs from them, what should be done in this period of time. Take a salary cut from the senior management, not from the middle, or start from the senior, then come to the middle, then to the junior one. So I think everybody has to make a strategy right now that what needs to be done during this period, next month what needs to be done, and then towards the second month what needs to be done. It's nothing like that. No, companies don't want to pay, but they are not able to understand what needs to be done in this kind of period. I don't think so that nobody would see that I don't want to pay a person who is earning 15,000 and running a household. But yes, I think they have to understand that they have to take insights from the people that what they want to do, because no one is 100% knowledgeable right now, because it's the first time people are seeing the situation. I think open communication. If somebody has a major problem and not able to, survive the livelihood, I think they should go to the employer and talk to in person, because right now everybody is in a crisis. I can understand the startups and the smaller organization, but the open communication will solve this problem. And if company is not taking a part and taking a decision to talk to the junior people and the
I kind of agree with that, Komal. I'll come to you.
Riyaz, I just wanted to say something to Komal for her employees.
Yes.
A regulatory ease has come through that the employees can access their provident fund, by the way.
True.
75% of their. So there are these things which you probably let them know to ease things out, and the government is going to be paying PPF for about 3 months for companies that have about 100 employees. Again, there's a minimum cap and a max cap, but
Yes,
for
of
companies
course.
below 10 and 20 employees,
Right.
there's point
And in
there. But
Delhi
sure, yeah,
NCR,
looking
yeah.
ahead.
In Delhi NCR, in Noida, basically, the government has said that there is no need to pay rent those who can't pay rent. So we have updated them. Yes, if you can't pay rent right now, pay it later. So letter of intent to the landlord in Noida is applicable, so that they can get a little
breather from what's happening. Yes,
comfort.
I'll come back to you, Komal, with more. But right now I have a question for Anubhav that's been posted in the chat section, which says, "Hi, I'm in real estate in construction, mid-sized apartments. How do you handle the current crisis, especially project loan with the banks when we can't expect customers?"
It is a problem. There is no doubt about it, because RERA is enforceable today, and the government, as of last time I checked, government has not tweaked RERA. So RERA stands as the compliance of RERA stands as it is. But having said that, mid-sized apartment owners are much better off today. They can slow down their projects. I know they have taken loans. There are going to be some relief coming in from banks. Expect another round of policy changes or some kind of a funding or some kind of relief coming from the government. The government has said that for business owners and others, another round of relief is coming. But having said that, look, take yourself in the position of a home buyer, a person who is already, is paying EMIs, and he's not able to pay because either his job is he's afraid that he may lose his job, or that he doesn't find that there's enough income to pay the EMIs and all. So what does he do? The first option he looks for is to get into and swap into another loan, get into a cheaper loan. That is the first thing that I can advise. Second thing that I can advise is look for an equity partner, like a business owner. He's doing this on his own, but maybe time has come today to take an equity partner, so that he doesn't have the burden of interest. He can share the profit. And last but not least, as we were just discussing in the question, don't hang on to something which is going to harm you in the long term. There should be no attachment to this. If push comes to shove, look for better opportunities and hive off from the project. See, I tell everybody, the most important thing in all this is not gold, not silver, not dollar, not equities, not commodities, not oil, nothing. It's you. So if you are going to survive, you're going to be okay. You're going to recreate it again. Don't panic. Don't get too emotional. Make a distinct, make a difference between your emotions and your logic, and let the logic work. Don't get too emotional.
Thank you, Anubhav, for that. Very wonderfully said. I have a question coming to Arvind. We hear that India and the world is going to face an economic depression similar to the Great Depression of 1930. Is this true? Second, when United States goes down, whether it will affect the India IT firms? Are we expecting massive layoffs in the months to come? Now, these questions have come to you, Arvind. Also, I'm guessing because you also handle ultra HNIs. You also handle a lot of bigger companies who invest in wealth management, and so you would probably also have some inside information. You'll also have a lot of input from people who share with you, usually giving you various reasons for their wealth management changes. So, what do you say about the question here?
Yes, I mean, the current situation, we're going to see a global meltdown happen for sure. We're seeing a lot of economies, be it in Europe, be it US, could go into a negative growth, which we're expecting to happen. India also, as an economy, would see the GDPs fall. There could be a couple of percentage fall in Indian GDPs as well, which could happen. Plus, globally, we could see that as well. Whether it'll get into the 1930 Great Depression is anybody's guess currently. We need to just wait and watch out what's going to happen to this pandemic we are in currently situated. On the IT front, yes, in 2008, although we saw a lot of layoffs happen because of the financial crisis which were there in the IT segment. But with new technologies and things like that coming in, I think there could be even opportunities for a lot of IT companies to take advantage of this particular situation, because a lot of work start getting outsourced, a lot of manufacturing industries coming into India because of the supply chain disruption which could happen. This could also lead to a lot of opportunities for companies and IT firms in India as well. And I think larger companies will be able to grab the situation much better than the smaller ones, because they will need to, they would have the manpower and they would have even the financial power to do that. Yes, there could be quite a bit of layoffs which we could see, but we really need to wait and watch what could be the major effect which would come in. But yeah, we are going to slow down for sure, yes.
Arvind,
I would like to, yeah, go ahead.
Sorry, Arvind, just to add to that, a lot of IT businesses and businesses that are in B2B now are looking at pivoting to B2C. And the best possible way for them is to get into the acquisition mode, acquire smaller players and start using their resources to go B2C now. So I'm seeing a lot of mandates coming my way looking for these little companies. That's the way they're going, by the way.
This is sounding really good. Yeah.
Yeah. Can I come in, please? Yeah. So Riaz, I tell you, I was looking at an interview of Alan Greenspan. This was a couple of months ago, and you know that the equity markets were already going up and down from before the COVID crisis, and then of course it was very resilient. But he said something very clearly, because he had the luxury of studying the Great Depression and taking a larger viewpoint. He said very clearly that one of the main reasons for the Great Depression to become the Great Depression was that when things started to sink, the government of the day pulled all the liquidity as if everything is going to go for a loss or sink, and they pulled all the liquidity. That made the situation really bad. So I think right now in the current governments in the world, liquidity is not a problem actually. Because remember, before last I checked and before the COVID thing, $11 trillion of bond yields had turned negative. So, the liquidity is not a problem. And that is the main reason that all that money was flowing into the emerging markets and into the liquid market. Now, I think that as long as the governments of the day keep the market liquid, country like India is very resilient with such a large population. You have kind of a self-sustaining economy. You're not going to go into a Great Depression unless you suck off all the liquidity from the market, and then people don't know what to do. So I think the government is very clear on that. Government has kept liquidity coming. FIIs have been, through FPI routes and all, have been investing into the equity markets. Remember, if I may say so, it is only 11, 12 stocks which were actually prepping up the Nifty and the Sensex. Others, mid-caps were not performing. It was because of so much money coming in and inflationary trend coming into the equity markets that everything used to boom. So government of the day understands you cannot allow a panic to set in. Everybody, I can tell you with great confidence, if you find liquidity getting really squeezed out of the market, understand there's trouble. Otherwise, whatever it is, at a cost, at a price, you will retain the value.
Thank you so much for that valuable input there.
Just one quick point on this is that what we all love to do is to compare every crisis with something in the past. Like COVID, we're comparing it with the SARS and all that. As I said earlier, I think every crisis is new. Theoretically, this might actually be worse than the Great Depression, theoretically. But what's got to be understood today, and that was never there in the past, is that today the size of the global markets is 4 times the size of the global economy, right? So the impact that you see on private markets, listed markets, everywhere is obviously going to be a lot more accentuated. So it looks a lot worse than what it really is, on the good side and the bad side both. And as Anubhav said, I think the sort of money which is getting pumped into, I think this is a tool that we all discovered in 2008. US discovered then, and I think post that, we've all been pumping in liquidity wherever we can. So that leads us to believe that I think everyone is okay with more money being into the market. Inflation is all right. Depression should not be something that should be concerning us at this point in time.
Well, I want to thank you guys for all your questions, but we've run short of time, Anubhav. Very unfortunately, we've run short of time because we have couple of other things planned up. But very, very valuable inputs that came from all of you here, from Anubhav, Komal, Rehab, from Marvin, from Rohit, all of us here. I'm going to let you sum up in 30 seconds, each and every one of you, if you have any parting thoughts. 30 seconds. Please keep it crisp. We start with Rehab.
Ria, somebody asked me about force majeure in agreements. I want to just answer that because that'll be helpful for them.
We don't have time. I think they
I'm gonna do this in 30 seconds. Okay, so guys, a force majeure basically is act of God. The government through a circular has said that any change in the supply would be regarded, pursuant to COVID, would be regarded as an act of God. So we can go under the force majeure clause, but every agreement will have to be taken into consideration and that clause on how it's affecting the main part and main purpose of the business. So please look at the main purpose of the contract, look at the force majeure clause, and then make sense of it. And you can always have addendums that modifying the contract, so you can have some negotiations. Just that. I'm good. Thank you.
Good. And please do get in touch with a lawyer like Rehab Dias, who can actually keep you safe at these tough times, right? Yes, Rohit.
Yes, I speak for the entire industry as such. I think it's a good time to stay in touch with your clients. I think it's a good time to postpone your payments if they're postponing it. Empathy is a great strength at this point in time. Today, it's also a great time, since we're all at home and we're saving a couple of hours at least in travel time, to read a lot more. And this time is not going to come back. I think the time that you can sleep a little more than usual and you can read a little more than usual. I think all of us need to stay connected with our clients as much as we can, stay connected with all sorts of business associates, as well as spend this time in developing our professional capabilities at this point in time.
Arvind.
Thanks.
I mean, Riyaz is more to what Rohit said. I mean, that's what we've been doing, meeting our clients, meeting in the sense, virtually meeting our clients, discussing with them, using this opportunity to really, up our skills, understand, read a lot. I think this is the right time to do that as well, because you're free at home, you're doing a lot of those readings, you're getting a lot of information as well on the net today. So use this opportunity and be safe, be healthy.
Okay, we're losing your audio, but thanks for concluding it. Anubhav?
So I'll start with what Arvind concluded with: stay healthy, stay connected. That's very important. Do not panic, persevere well, keep yourself liquid, look for opportunities, don't jump into opportunities. And very important what Rohit said, that, every crisis is new and we should not try and compare. He's very right, because, past is a place of reference, not residence. We live in the present and look towards the future.
Okay, and finally, Komal.
I just want to tell that take it as an opportunity and implement things and go for ERPs, look for options, look for learning online, do courses, and stay healthy and stay blessed. That's it.
Komal, love what's the background, by the way.
Yeah, this is good things are going to happen. Good things are going to happen.
Something similar to my WhatsApp status as well, Komal.
True.
Something good is about to happen.
Right.
But I tell you what, ladies and gentlemen, it's been an absolute pleasure having all of you as part of my panel here today. It's been a fantastic 5-pack panel. At the right time, under lockdown times, we've added a lot of value, I suppose, to all the audiences who participated, to people who post questions as well. Thank you, big. Thank you. A very big thank you to you guys. But I want to leave you with this thought. Ponder upon this thought, each and every one of you here, including me. Have we done enough to stay resilient? A pandemic like this shook us all, got us onto our knees, onto our whatever you want, on the floors completely. Yeah. If we have to just panic for another 15, 20 days of lockdown and start to worry about the future, have we earned enough money, starting to save as individuals for our own families to keep us safe for the next 1 year? Do we not have to think like banks who have cash reserve ratios set for themselves, where they do not touch a sizable amount of the money no matter what happens? Even Reserve Bank does it. Every bank does it. They're supposed to do it. Keep some money for tough times like these. And as individuals, part of a salary that goes into PF is fine, but do we also have a contingency account where we save our money enough to tide over these kind of tough times? So let's say for 6 months, let's say we are laid off from our work and we don't get paid for the next 6 months. Can we stand good? Me as an artist, if I don't get called to host the next big event, to moderate the next big event, to not get the next paycheck for the next 6 months, can I tide over this crisis with my own saving? Saving is key. Investing it in liquid assets, like Anubhav said, is key. To keep money enough for you is key. So the next time around, when we get back onto our feet in the next 2 months or 3 months, hopefully within the next 3 months, not more than 3 months, with God's grace, I think the first thing we need to do is think about this and prepare ourselves for, God forbid, for anything else major that could come in life. I wish you good. I wish each and every one of you good in life. Take good care of yourself and God bless you, and stay connected in these times with not just your clients, with people like these as well who came on board today, and connect back with them through their social media, through their Insta pages, through whatever means you could.